What's going on, guys? In this video, I'm going to break down my trading week. So last week, I made about $37,000 from trading. Now, what I want to go over in this video is I want to recap some of my trades, and I also want to give you guys some tips and guides on how to have profitable weeks, how to react after you have profitable weeks, and what to do if you have a bad trading week. Now, first thing I want to say is when you guys are trading, you guys are not going to have profitable weeks every single week. Right? Some weeks you're going to be profitable, some weeks you're not going to be profitable. The whole goal as a trader is to put yourself in a situation where you find the highest quality setups, and when the setups do present themselves, you are able to execute. The second thing I want to bring up is that you don't have to trade every day. So last week I didn't trade every day. I only traded 3 days. 2 days I didn't find any high probability setups, any setups that I liked, so I did not trade. Now, what throws a lot of people off is that some days when you don't trade and you're not comfortable, you're not confident, you maybe don't see anything in the market, and then you see one of your friends or someone online make money, you as a trader get very frustrated, right? You need to build your confidence level to a point where you're like, hey, I don't need to trade every day. If I see him or her make money today, they probably have a different approach. Maybe they were more confident. So just because you don't trade a certain day and someone else makes money does not mean you're a bad trader. It just didn't fit your agenda. It just didn't fit your trading style. So once again, just going back to it, I only traded 3 days. The other 2 days, there's so many traders that made money. I saw it. It's okay. You need to learn how to move on and not let that get to you. And the third point is, as a trader, you have to understand you're going to have some weeks that are great, some weeks that are okay, and some weeks that are bad. Now, even as a trader, when you have good weeks sometimes, you need to be careful, because when you have a good week, a good day, a good month, some traders become overconfident. Now, once they become overconfident, what they start doing is they start taking big sizes, they start trading recklessly because their ego and their confidence kicks in, and that throws you off completely. So what you have to do during times like this is keep yourself leveled out and understand that, hey, I need to keep trading the way I'm trading. I shouldn't oversize. Shouldn't go more aggressive. I need to keep trading the way I'm trading and stick to the same plan and not change anything up. Most traders switch up their whole trading strategy or trading approach, or they oversize because they've been consistently making money. No, stick to the same plan, and if you want to size up, take it up one step at a time. Now let's jump over to the charts. Let me recap some of the trades just to show you guys a full breakdown of the week and so you have a better understanding. All right, so right here I have my P&L open from TD Ameritrade for my account. You guys can take a look. $37,000 in profits from December 2nd till December 6th. There's my account number. Just wanted to show this before I started the video. All right, so let's walk through all the trades. So these are all the trades right here. I have a video on this Roku trade. I already posted this, so you guys can check out my last YouTube video where I kind of walk you through this trade. So the first trade I'm going to walk you through is the shop trade. Now, let me just get the entries and exits out. So this is the shop trade. Let me open up the calendar and the time. All right, so I traded stock shop on December 5th, right, at 10 a.m. So let's go to December 5th. This is the date you guys can see. Let me move this right here. Now on December 5th, I traded this stock. Where's my entry? Where's my exit? Let's walk through that right now. So for this stock, what I did is I got in 20 puts at 10:02 a.m. Now let's go to 10:02 a.m. Let's walk through my mindset. 10:02 a.m. So this is kind of my first entry. Now, a few things I want to bring up. Why was it at 10:02 a.m.? Now, for anyone that's been trading and watching the markets a lot, you can see, or you've probably seen in the past, that at 10 a.m., the market usually reverses or market usually consolidates or something happens at 10 a.m., right? So usually a lot of times if I trade between, let's say, 9:30 till 10 a.m., and I haven't taken a trade till 10 a.m., I like to wait 2-3 minutes after 10 a.m. That's number one. Why? Because once again, sometimes you might see the market dumps until 10 a.m. and then after 10 a.m. it starts reversing. Even if we go to today, like let's say we look at, for example, let's say we look at Apple today, right? If we look at Apple today and we look at 10 a.m., you can see around 10 a.m. what starts happening. Market started reversing. Now, why is that? That's because at 10 a.m., the first 30-minute candle gets formulated. Also at 10 a.m., there's a lot of economic events that come out. So depending on that day, certain economic events can make the stock go down, can make the overall market go down. So if the overall market goes down, a stock like Apple, Shop, Roku, so on, big names are going to get affected, right? So waiting for that time, especially if you're at 9:59, 9:58, just waiting extra few minutes to get better market direction pays off, right? So that's why the entry was after 10. Like you're not going to see my entries ever be at like 10 or 10:01. I like to wait for maybe the economic news to hit or get better market direction, right? So now going back to Shop, and we go back to December 5th. This was a very, very quick scalp. Very quick scalp. So Shop was on my radar that day. I was watching a Shop to begin with. You guys can see low of the day, first 30 minutes, Shop, no real price action. Right around here, the market is also selling off at 10 a.m. Market is also pushing down, and Shop is on my watch list. Now, seeing Shop around 10:02 gave me confirmation that this stock looks like it's going to continue dumping. Now, the confirmation I got here was A, this is low of the day, LOD. Let's call it low of the day, but that's not enough. Just having a stock at low of the day is not enough. Second confirmation was that the overall market, there's certain market indicators I look at, such as the tick, such as ADD, such as ES, such as SPY. There's certain market indicators I look at that give me an idea on what's happening with the overall market. So with that being said, when I was looking at those indicators, they were showcasing me that the market looks weak, market looks like it's falling. So seeing Shop make a low of the day, seeing the market look weak, gave me the confirmation that this looks like it can continue. Now me, I'm scalping. I'm looking to get into a position, get out in 5 minutes, maybe 10 minutes, sometimes even in a minute. So my entry is at 10:02. Now after 10:02, about 4 minutes later, you guys can see I execute my full position. So about 10:06, which was legitimately right here. So around here, I exited. Now as a trader, especially if you are trading options, all I'm looking for is I'm looking for 1 or 2 point moves. I'm not looking for anything crazy. I'm not looking to get in this position at 366 and have it go to 350. No, I'm looking for a 1 or 2 point move. Now when you look at this play, once again, you can see I entered at 10:02. 10:02, the stock is trading at 366. I exited around 10:06. 10:06, it's around 363. So I captured a 3-point move. Now, for anyone that doesn't know, you can make money when a stock goes down. You can either short the stock or you can buy something called puts. So what I did right here is I bought puts. As you guys can see, I bought puts for this stock. So when you buy puts, you're making an assumption that the stock will go down. So I traded the 365 puts and I'm trading the weekly expirations, which are risky. For anyone that doesn't know options, trading weekly expirations have a lot of risk. Yes, there's a lot of upside, but there's also a lot of risk. So you have to be very, very careful with this, guys. Now, if you look at this trade, my entry was at 560, my exit was at 689. Okay. Now, when you look at options, one contract equates to 100 shares. So 20 contracts equate to 2,000 shares, right? So basically, I bought 2,000 shares, right, at 560, and I sold 2,000 shares at 689. So I made $1 and a few cents on the trade. So that's 2,000 shares multiplied by $1. What is that? 29, 129 about $1.29. That's the profit, which was a little over $2,000. So this move right here netted me a little over $2,000. Now, how much money was invested into the trade? That's what everyone really worries about, which is the wrong thing to worry about, but let's get to the bottom of it. So I bought one contract for 560. I bought 20 contracts, which is 2,000 basically shares. So you just do 2,000 multiplied by 5.6. So if you do 2,000 multiplied by 5.6, what does that equate to? 2,000 multiplied by 5.6. That's $11,200 in this trade, and this trade netted me about $2,500, which is like 15-20%. So that was my shop trade. Now, just a few pointers I want to bring up. When you guys are trading, I know you look at options, they look very attractive. You need to be careful trading options, guys. Options are great, options are fun, but they can hurt you very, very bad. You need to understand there's a lot of risk associated with them. That's number one. Number two, it looks very easy. It's very easy when to go back to a stock chart and for me to tell you, hey, I bought here, I wish I sold here, or I could have bought here, I could have sold. It's very easy. But what you guys don't understand is when you're in a trade, guys, it's very different. Being in a trade and not seeing what's gonna happen next, seeing like green candles pop up, getting scared, letting emotion step in, that's what throws us traders off. So when you look back at a chart and just say, wow, this is it, this is all I have to do for trading. No, there's more to it, right? Because once again, it's very easy for me to go and say, oh, let me get in here, let me get out there, let me get in here, get out there. It's very easy to do that. But in the moment, when you don't have this information, when you don't know what's ahead, it's actually very, very hard. Right, let's go over one more trade. The second trade I'm gonna go over, and I'm gonna leave it at that, is my Apple trade. So my Apple trade was a quick trade. Where is it? Right here. Okay. So now for my Apple trade, let me just get this. So I traded Apple on December 5th, right here. So going to Apple on December 5th too, you can see a very similar concept. So going to Apple on December 5th, let's go to December 5th, let's go to December 5th, this is December 5th, just going up the date right there, December 5th, December 5th, December 5th, December 5th, December 5th, right here. Okay, now looking at December 5th, let's go back to this trade. Oops. All right, so let me get my order execution details. Okay, so December 5th, this is the trade right here. So if you guys take a look at this trade, December 5th, I traded puts on Apple as well. Another trade, traded puts. Once again, me trading puts, I'm making an assumption that the stock price will go down. Now, after the shop trade, this is what I traded. I traded Apple. Right now, before I just kind of show you guys Apple, I want to show you SPY. I'm going to show you SPY for that day. SPY basically represents the overall market. This is one of the market indicators I look at alongside with ADD, TIG, and so on. Let's go to SPY on the same date. Shit. Now, if you go to SPY at the same date, just so you guys have like a visualization of kind of what's going on, let's look at SPY on December 5th. Now, right here, I have SPY going on December 5th. Right? Now, if you see SPY right here, December 5th, you can see what happens around this time period of 10 a.m. So around this 10:08 to 10:12, which is right here, 10:08 to 10:12, right? The market is dumping, right? So if you look right here, market dumps hard. 10:08 is right here, market is dumping. This is 10:12. Now, I want you to keep this in mind, and I'm going to show you why I want you to keep this in mind. Okay? This is SPY, once again, the overall market. This is Apple. Now, my entry on Apple was at 10:08. So if you go to 10:08 on Apple, this is 10:08. This is where I'm entering Apple. Now, I'm entering Apple because Apple heavily follows SPY. Now, as I mentioned, there's other market indicators, which I don't want to jump into right now. It's just going to confuse everyone, that I also look at that give me a clear identification on what the market is reading. Is money being flown into the market? Is money getting taken out the market? Are more stocks uptaking or are more stocks downtaking? What's happening with the overall market? So basically, in simple terms, the overall market around this time is telling me that it's selling off. The market as a whole is weak right now. At this particular time, the market is weak. Me as a trader, I don't care about tomorrow. I don't care about next week. I don't care about next month. I care about now. So right now, what the market is reading me is that the market is weak. Great. That's what I want to see. I want to see that the market is weak, so it works accordingly. Now, when we go to SPY, this is SPY until 10:08. 10:08, SPY is making a low of the day, a new low of the day. As SPY is making a low of the day, Apple is pushing down. The overall market looks weak to me. Me as a scalper, I'm like, great, this is my setup. This is the opportunity I want. I'm out of my shop trade. I'm in my Apple trade. Cool, execute. So first thing I do is I take on a trade. So I get on a trade and I get filled only 63 contracts. I wanted to buy 100, but I didn't get filled for 100. I only got 63. So I got 63 contracts right here at about $1.05. So once again, remember, when I buy puts, I'm making an assumption that the stock price will go down. Once I bought the puts, you guys can see about 4 minutes later, I got out of my position at 132 at 10:12. Now, if you go to 10:12 and we take a look at 10:12, this is 10:12. Now, let me just go back a little bit. This right here is 10:12. Now, it doesn't, when you look at the chart now, it's like, oh, why would you get in? Why would you get out now? It doesn't make sense for you to get out now. it's still selling off. Everything is selling off. Now the reason I got out is because when we look right here, right around 10-12, if you guys take a look on SPY is holding around 10-12. SPY's holding, Apple's holding. So now my concern is, okay, I'm up about close to 30% on the trade, about 25% to be kind of near an exact number. So I'm up about 25% on the trade in under 4 minutes, right? 4 minutes, I'm up 25%. Do I lock this in or do I hold? Now, my approach was I can lock this in. If the market continues to push down, make a new low of the day, I can always re-enter. You're up 25% in a very short period of time. Take it and run. So I was like, cool, take it and run. There wasn't nothing I saw that showed me the market's gonna go up, market's gonna go down. No, it was just simply, hey, I'm up 25%. I got in at $1.05. It's at $1.32. Get out. You're up. Don't be greedy. So I took the trade. Also, this flattening out made me kind of stick to the sidelines a little bit. So I got out at 10-12. Now, if you keep progressing, yes, at 10-14, it went lower. I could have made more money, just like every other trader thinks. But if you look at the bigger picture, me sticking to that plan, me getting out, actually saved me, right? If you look at that, me sticking to a plan, me sticking to my scalping strategy, I made my money, I'm happy. I made my money, I'm done. Now, if I was greedy and I assumed, oh, it's going to go down lower, I want to make 100%, I want to make 200%, I would have lost money. Thing I want you to take away with this: when you go in a trade where you're doing well and it's working accordingly to your plan, take the profits and run. A few weeks ago, I posted a video on my Tesla trade where I lost like 15 grand. The reason I lost money on that trade is because I didn't sell when my plan was to sell at this level. I got greedy. I wanted more. So because I got greedy, because I wanted more, when the stock reversed, I ended up holding. Human nature. That's how we work. So I learned from that and I was like, okay, don't do it again. We humans are going to consistently make mistakes in trading, especially mistakes like that, but not 2-3 weeks later. Like maybe 5 months from now, I'll maybe make the same mistake. As much as I don't want to, it's going to happen. But we as traders just need to make sure that we are aware of those mistakes and constantly keep building on them over and over and over again. With that being said, I have more videos on my YouTube channel. Check it out. If you guys like the video, like, subscribe, comment down below. I'm replying to people in the comments on any questions you guys have. And if you guys want me to make a video on a certain topic, please comment that down below too, and I'm going to post a lot more content. Thank you guys for watching, and I'll see you guys in the next video.